So, give you a quick update on the markets and why I think the UK might actually do a little bit better than it normally does, and why there's more downside to the American markets. Let's just have a look at my update. This is what I see on the S&P 500. Now, what I've drawn there is the chart over the last 10 years. The blue line is the average growth rate, okay, of the market, which reflects to some extent the average growth rate of the economy. And you can see with the two red dotted lines, two standard deviations above and below the average growth rate, because things don't tend to hit the average every time perfectly. What happens is markets over and under react. That's what you're seeing. What's most likely to happen at the moment? Well, I've drawn in red what I think is a more likely scenario. And the most likely scenario is, whilst you might get the odd day where the market just pounces up, just for a day or two and everybody thinks things are over, in actual fact, it'll most probably look to hit that lower boundary on the S&P 500. So if I had to put my money anywhere, I'd say we're probably still going to get a few more days, maybe weeks, if not longer, of downward pressure. All right, the FTSE 100, slightly different story. Again, over the last 10 years, I've taken that period and I've said, well, what happens if you look at the average growth rate, again, for the UK economy, slower than the US in terms of stock market growth, two standard deviations above and below, and you can see what happens. Where are we at the moment? We're spot on, pretty much at its 10-year average. That's where we are. And therefore, yes, it could go in that direction or it could go lower in that direction. Put a gun to my head and I'd probably say more likely to be on the upside than the down. Institutional money certainly seems to be talking about putting more capital to play in a relatively undervalued UK market. But that's more a short-term trade. Personally, I look bottom up at companies, look at their valuations, growth, revenues, cash flows, and the like. But I'm just trying to give a macro impression to you here. Like I said, what worries me more is that whilst, yes, this can go up and down a little bit, it's more likely to go to that bottom standard deviation, I think. Now, you might get a couple of big rally days, but more probably you're going to go there. Could you even go below that standard deviation? Could you really break below two standard deviations? Exceptional event? Yeah. The Russians move into Ukraine. You probably will get that. Inflation gets higher. Interest rates get escalated even more, as much as conflict in Eastern Europe, and all of those things could lead to that accelerating and exceeding that two standard deviation gap. So watch out. Have a look at my campaign for $1million.com to learn more about investing.